My boss, Mr. Avesh Kumar Siddham, Governor of the Mauritius and Chairman of the Board of the RCE, Dr. Navin Tigarin, Director General of the Financial Services of the Financial Crimes Commission, and Board Member of the Governing Board of the RCE, Mr. Prakash Sishankar, Officer in charge of the FSC, Dr. Kamine, Director for Financial and Enterprise Affairs, OECD, members of the RCE Governing Board, representatives of the OECD, distinguished panel speakers, distinguished guests, and Governor, ladies and gentlemen. Good morning. This is classic. I say good morning to all of you, nobody responds. I thought you would at least reply and say yes, good morning. It gives me great pleasure to deliver the opening remarks on the first day of the workshop on digital finance in Mauritius. When I look back a few decennia ago in Mauritius, in the villages, we have no electricity. People of my generation, we grew up with a petrol lamp. The radio was a luxury, and television came much later. Today, we are talking about artificial intelligence, robotics. Ladies and gentlemen, man has made much progress. We have become masters in technology to such an extent that we are becoming disturbed in thought as in action of the technology that we have ourselves created. They say that technology allows people to gain control over everything except technology itself. Others say that men have become the tool of their tools. Stephen Hawking even said that the development of full artificial intelligence could spell the end of the human race. I'm not saying that, he said. Digital finance is a term used to describe the impact of new technologies on the financial services industry. This workshop will focus on how such new technologies will impact the various areas of finance. When I flipped through the agenda, I noted with interest that decentralized finance, fintech lending, open banking and finance, innovation and AI within the African context will be discussed. I did a small search and found that it was Blaise Pascal, French mathematician of the 17th century, who constructed the first calculator, the Pascaline, not to be confused with my friend Pauline, for addition and subtraction. This calculator was a forerunner to the development of mechanical methods of calculation or automated processing of large numbers of data over the following century. It was Alan Turing, however, an English mathematician and computer scientist who conceptualized the computer machine in 1937. Quite interestingly, those two mathematicians, 4 centuries apart, share the same concept. Blaise Pascal emphasized the importance of independent thinking for human beings in his famous phrase. Man is really the weakest of nature, but he is a thinking being. Alan Turing came up with a test about whether a computer can communicate well enough to persuade a human that a computer too is human. Ladies and gentlemen, I know what intelligence is. Intelligence, we all have an idea of what intelligence is. But I wanted to know the difference between human intelligence and artificial intelligence. We've heard about artificial intelligence, we know what is intelligence, but there should be a difference between human intelligence and artificial intelligence. Human intelligence is essentially our ability to understand, learn from experience, and use the knowledge thus gained to adapt to a new situation. AI, on the other hand, is a machine. It's a machine ability to perform the conscious intellectual functions normally associated with human minds. AI may sound glamorous from a technological perspective, especially at a time when the financial services industry is undergoing a massive transformation that is being driven by rapid evolution of technology. Sundar Pichai, the CEO of Alphabet Incorporation, said, AI is one of the most profound things we are working on as humanity. It is more profound than fire or electricity. However, AI is just a tool, and human beings should know how to make judicious use of it. From the financial perspective, we need to think independently and positively on how to make an efficient and effective use of new technologies to further develop the financial services sector. AI in finance is an opportunity that we cannot afford to miss. However, AI requires regulation and supervision as the stability of the financial system might be at stake. The use of AI comes with risk. If machine learning services are offered by a small handful of large technological firms, the probability of creating disruption if one fails increases. The dispersed governance processes and lack of transparency do render decentralized finance difficult to regulate. In a report released by the Financial Stability Board in November 2023, it is highlighted that major suppliers of AI and machine learning tools to financial services firms may fall outside the regulated perimeter or may not be familiar with applicable law and regulation. But ladies and gentlemen, That doesn't prevent us from keeping an open mind and look for opportunities. Technological innovations are here to stay, and digital transformation is changing the way we think. Regulators do not wish to stand in the way of progress. Lack of information, lack of suitable technological infrastructure, poor data accessibility, lack of trust, amongst others, are some of the factors which could hinder us from fully exploiting the opportunities ahead. We need to work on such barriers while adopting a cautious approach. Digital and financial services powered by fintech have the potential to transform Africa's development path. It is no secret that most African first interaction with the financial services sector may be more through their smartphones rather than opening a bank account. According to the World Global Index database, Africa leads the world in mobile banking and mobile money adoption, the primary driver of digital financial inclusion. Just under 500 million people in Africa are unbanked, whereas just over 410 million are underbanked. These financially excluded Africans are neither able to secure and grow their savings, nor have access to loans or insurance services. Open finance could break down barriers to financial inclusion by leveraging on technology to reach the underserved population. A recent report by Boston Consulting Group revealed that Africa's fintech market is expected to reach 65 billion by 2030. These figures reflect the potential of Africa's unbanked population, in turn unlocking the continent's untapped possibilities. Tim Cook, the CEO of Apple, said, what all of us have to do is to make sure that we are using AI in a way that is for the benefit of humanity, not to the detriment of humanity. I hope I've not been too long. And therefore, as they say in their playbook, I'm going to try the dissent now. I hope that the discussions of the new 2 days have cleared some of those doubts in me and encourage collective discussions. After all, the future of financial services hinges on striking a delicate balance between technological innovation and responsible implementation of this innovation. So therefore, finally, ladies and gentlemen, thank you for your kind attention.
Thank you, Mr. Modaya for this insightful speech. Ladies and gentlemen, our next address will be delivered by Dr. Carmen Zinoya, who is the Director for Financial and Enterprise Affairs at OECD. I now have the pleasure to request Dr. Zinoya to say a few words.
Okay, so I will not be able to be so good to list all the distinguished people here, so I will not repeat all of them, but you had already, so it's great to be here, and so welcome all of you joining us. Actually, here in person, but also I know many people online, I understand. So good morning, good evening to everyone who is also online. It's great again to be back. So it's my third time and to get this workshop on digital finance in Africa, actually as part of OECD collaboration with the Regional Center of Excellence of here in Mauritius, RC, and actually to announce also the future of the OECD collaboration with RC alongside with Governor Polish Sibolan, Governor of Bank of Mauritius, but also chair of the board of RC, and first deputy governor and chair of Financial Services Commission, so Mr. Kona Yerokonon, and all I'm happy that here also with other colleagues of the board of RC. Now, I also would like first to express my gratitude to the FSC and Bank of Mauritius for the support for the center, which has served since 2019, if I'm correct, as a platform for close collaboration between our institutions and also engagement with the region, and more recently with also the outstanding leadership of Ms. Kerti Ramsoro, and also the work of all the team of RC, and I really want to already to thank you. Now, I also want to give a warm welcome to participants from across Africa, and this is a raison d'être of the RC, and particularly for those joining us today in person from outside Mauritius. I understand we will see there are many speakers from other countries, from Kenya, Rwanda, Zambia. We will have actually, due to a delay, so AI is not necessarily hedging the risk of delayed flights. We will have Catherine Gibson, Deputy Commissioner of South Africa Financial Conduct Authority in short. She will arrive later. Now, I'd like to first offer maybe very quickly, I think, Kona, you gave really a very inspiring speech. Thank you for that. But a couple of reflections on the topic before us at this workshop, and then maybe also turning to the future OECD, the collaboration with RC. Now, over the next 2 days, and again, as Kona also mentioned, this is the topic everyone is talking about, but we should also reflect and study the past to define the future. But we will explore initiatives and policy developments, so highlight also new OECD analysis. We will present also, according to our agreement, two new important papers, and also reflect on in the next session actually on one on DeFi financial inclusion, which I've been working recently at the OECD. And so, but also to showcase emerging practices in Africa, OECD countries, and beyond. We also aim to support responses that foster responsible innovation in digital finance, while mitigating actually key risks. It's a big, huge, opportunity with the risks that are there. Now, the landscape is evolving rapidly, and African policymakers are already paying close attention to digital finance applications. So given the potential to spur economic development, enhance regional connectivity, and support both international and regional activities. And the broad, many initiatives that are around. So it will be crucial that to ensure that digital finance fosters sustainable economic development throughout the region, all over, and throughout all the population. We are seeing a significant amount of policy action across the continent towards this goal, and I want to note two important areas of interest drawn actually from original OECD analysis we will be presenting and discussing over the next 2 days. So the first area of interest, and so there were some hints in Mr. Kona's speech, is the growing importance of fintech lending. The market has significantly increased over the past decade, which allows borrowers to apply for loans online through non-bank financial entities. Now, in the sub-Saharan Africa region, telecommunication companies, we know actually some important countries, they play really a key role in this market. their mobile network infrastructure, which actually is widely used, and can so reach a broad user base, so including the unbanked and the underbanked users. Everyone has a phone, and not everyone has access to has a bank account, has access to a bank branch. Driving so financial inclusion and accessibility to digital financial services for previously underserved populations. And this is, I think, a question of financial democracy. Now, while fintech lending does not present significantly different risks from those in traditional lending models, such as credit and liquidity risks, now the technological and non-traditional nature of fintech lending does, give rise to additional concerns around stability, regulatory arbitrage, and lack of consumer, safeguards. And they are also maybe increased by the development of technology, the use of AI. We were discussing a couple of weeks ago at the OECD, we had an FSC OECD roundtable on AI in finance, so how really the benefit that we can have of many people that were simply they didn't have access to a simple bank loan due to unjustified biases sometimes by banks and by bank operators. Now, with the use of AI can help them. Imagine also young people with a startup without a credit history. They may have access. This is good. On the other side, this is also a black box, and sometimes how you input the data there could create even more unjustified biases. Okay, and this was the discussion, by the way, I was telling we were just chatting before, we had last week, the Financial Stability Board, the plenary, there was a strong discussion on that. So, we find that while many countries in the region offer robust policy frameworks for digitally enabled financial service, policy frameworks for fintech lending are more uneven in comparison. And this is one area. The second area, and again is another topic of another panel, is the potential for open finance, and again that was mentioned by Becona, open finance and banking to significantly benefit sub-Saharan African economies by improving financial services, empowering customer choices about data, and promoting competition and innovation. These are powerful, powerful instruments. So open banking, open finance involve the sharing of data via standardized and secure interfaces at the request of client. So these advancements can help to address limited banking infrastructure, facilitate fintech innovation, and further leverage the high mobile money account ownership in the region. Now, several African countries already have open finance regimes in place, and will be drawing on experiences from the region and the OECD to highlight the policy options to harness data toward more inclusive and efficient financial service. And this will be a very interesting also session, because I think sharing information and development is increasingly important, especially when we have more and more integrated financial systems, and so moving across it's easy. Now, importantly, this includes considerations that could help harmonize efforts across countries in the region that have or aim to have operating open finance and open banking frameworks. Promoting interconnectedness, knowledge sharing, and policy development with reference to international standards and practice is a key part of the OECD involvement in the Regional Center of Excellence here in Mauritius. And this leads me to our future collaboration. The collaboration between the OECD and RCE is now in its sixth year. I have benefited in the last 2 years and a half after I joined the OECD, and I'm really very happy and satisfied. I think this is really, is a Pareto improving. Everyone is better, and we're doing really very well. Together, we've held numerous workshops for policymakers across the continent and beyond, on a full range of topics fundamental to financial regulation and supervision, capital market development, financial integrity, public debt management, and global trends like sustainability and digitalization shaping finance, very our economy, corporate governance, and all. So I'm pleased to stand here beside the leadership of the Bank of Mauritius and Financial Services Commission, in agreement to continue our collaboration for several more years. Starting in 2025, the OECD and NRC will establish an annual roundtable on banking and financial markets in Africa, held here in Mauritius. So bringing high-level officials from across the region together, along with OECD countries, to exchange on the latest market developments and the forces shaping finance in the region and the world. So roundtable discussion and outcomes will be supported by an annual OECD Capital Market Review of Africa, with unique data and original analysis offering novel policy insights to participants, allowing the roundtable to speak directly to the needs of the region and maximize impact on policy. This represents an exciting new direction in OECD collaboration with RC and Mauritius. It will strengthen the ability of the RC to support policy development across the region and also deepen OECD analytical work in Africa. The agreement will be sooner, before the OECD Budget Committee, and I would like to express my gratitude to the Mauritius Financial Services Commission and the Bank of Mauritius for their unfailing support. So let me stop here. Also, I also spoke too much, but whenever you give a talk in Italian, it's always very risky. We're always very talkative. So let me stop here and conclude by saying that I really look forward to participating in the discussion over the next 2 days and also to the continued OECD engagement with Mauritius and DRC. So thank you very much.
Thank you, Dr. Dunia, for the detailed explanation on the policy workshop. Ladies and gentlemen, our keynote address will be delivered by Mr. Orvesh Sirulam, GCSA, who is the Governor of the Bank of Mauritius and the Chairperson of the RC Governing Board. I have the pleasure to invite Mr. Sirulam to come on stage to deliver his keynote address, please. Thank you.
The first Deputy Governor and also the Chairperson of the Financial Services Commission, also a member of the Governing Board of the RCE, Dr. Navin Bikari, Director of the Financial Crimes Commission and also member of the Governing Board of the RCE, Dr. Carmine Dinoya, our dear friend from the OECD, who also attends meetings of the Governing Board of the RCE, Dr. in charge of the Financial Services Commission, other members of the RCE Governing Board present with us here today, members of the board of the Bank of Mauritius, members of the board of the Financial Services Commission, Deputy Commissioner of the Financial Sector Conduct Authority joining us from South Africa later on today, I understand. There have been a delay in the flight. Members of the press, distinguished guests, as always, it gives me a great pleasure in extending a very warm welcome and a very good morning to all of you. Today, I understand, marks the 17th meeting of an initiative under the RC ambit since we've established our collaboration with the OECD. And I also understand that all our past initiatives have, up till now, led us into a situation where we've been able to have attendance in excess of 5,500 delegates, either joining us virtually or physically. And, very interestingly, from various parts of the world, including Again, I understand 34% from Africa, 24% from Asia, 24% from Europe, and 18% from other parts of the world. This sends a very strong indication to the fact that the coming in place of the RCE back in 2019 was of instrumental importance, and it will certainly continue to deliver on its mandate by reinforcing partnerships and collaborations between the various partners and the various stakeholders with whom we work. Now, the topic of these 2 days gathering and workshop is again of very high relevance and pertinence: digital finance in Africa. It's a topic that I think we have all been speaking about over the years. It's a topic that has huge potential, but certainly with the risk of not repeating what the first deputy governor and the director from the OECD has already mentioned. I will try and summarize what I intended to speak on the topic itself by saying that digital finance in Africa, and certainly in other emerging parts of the world, has a very instrumental role to play. And it will continue on playing that role to be able to deliver the benefits to the citizen of the continent of Africa and certainly other emerging parts of the world. And when I look at the benefits that digital finance can bring to the emerging world, I would tend to summarize it in a beautiful word which has a very strong meaning. That word is ACE, A-C-E. The A stands for improved access to finance, improving the rate at which people can get access to finance is a game changer in the advancement of any economy. And more so in the case of Africa, we have had examples. There have been solutions that have been put across many countries. And the very well-cited example since many, many years has been the M-Pesa case, which has proven itself as being a game changer and continues to be a source of inspiration for many other countries in Africa and many other parts of the world also. And by having an improved access to finance, you are actually giving an impetus, you're actually giving a very important catalytic function to economic growth further by improving, the development of SMEs and certainly integrating more stakeholders within the broader economy. The C of the A's can have many meanings. It would mean compliance. Digital means and digital tools can increase compliance in the world of finance. It increases transparency altogether. It would mean better confidence in the financial system. It would also mean, very importantly, lower cost. One of the major blocking factors today when you look at finance in Africa is the high cost that is involved with it. And by reducing the cost of accessing finance, you can actually not only better the inclusion rate of finance within the society, but very importantly, contribute to, again, better economic development and driving major economic activities. And therefore, this contributes to the betterment of the continent as a whole. The E of the A's word refers to efficiency in finance. Again, digital finance has a very important role to play in increasing efficiency. And by increasing efficiency, it's connected with the confidence of the C of the A's world. So therefore, for me, digital finance has a beautiful story to narrate in the advancement of emerging world, and more so in the case of Africa. And as I said, I will not repeat, what the FDG and the director has already mentioned in terms of figures and all. But what I intend to do now, over the next few minutes, really, that I'll be with you here, is to detail a bit some of the initiatives that we have been embarking on at the level of authorities in Mauritius in trying to improve access to digital finance and in trying to draw the parameters in which digital finance has to evolve in our country. And with this, ladies and gentlemen, as we navigate through the manifold intricacies and complexities forged by the dynamic global environment, it is crucial to hit, I would say, the pause button and take a trip down memory lane to take stock of the progress that we have made so far, while being mindful of lessons learned all along the way to be able to better prepare us to achieve more. The digital revolution that we are all living has made tremendous progress in the banking world and broader financial world, with indelible consequences. The COVID-19 pandemic has hastened the pace of digitalization and encouraged the use of technology in the delivery of financial services. The Bank of Mauritius has actively supported this paradigm shift in the broader development of the financial ecosystem, and we adapted our regulatory and supervisory framework while ensuring a proper nomenclature for troubleshooting and managing risks that may emerge. Here, we need to constantly remind ourselves that with technological breakthroughs and subsequent penetration of the digitization and datafication paradigm into our daily routines, the nature of risk in the provision of financial services has undergone important transformations. Understanding the evolving nature of this risk involves cross-fertilizing ideas from several disciplines that were hitherto, I would say, considered as mutually exclusive. This is where initiatives launched by the RCE take their pertinence anchorage. Capacity building initiatives aligned with talks given by experts from various disciplines help shape the thinking process and bring fresh perspectives on the multifaceted nature of risk. Regulatory agencies in Mauritius have not been sitting on their laurels. At the level of the Bank of Mauritius, we have stepped into this rapidly moving bandwagon and have managed to pull ourselves up in the pilot area in many fields, I would say, as the main locomotive. We are now comfortably seated in the driving position. Several guidelines on cloud services, cyber and technology risk management, and virtual assets-related activities were released already. By the end of June 2024, that is the end of this very month, financial institutions falling under the ambit of the Bank of Mauritius regulatory and supervisory regimes must completely comply with all the requirements of the guidelines that we have introduced. We are also fully cognizant of the importance of promoting financial inclusion and literacy as catalysts for sustainable economic growth and social development. Indeed, theoretical and empirical research has since the 1980s showcased the monotonic relationship between financial inclusion and economic development. Moving from microfinance doctrines in the 1980s as mechanisms to allow access to finance to the downtrodden and the disenfranchised members of society, the financial inclusion concept has migrated towards incorporating mobile phone technology and other digital means as key drivers of service delivery to those who would otherwise have been weeded out of our financial system. More recently, the debate has moved towards adding a gender balance also to the narrative by underscoring the fact that financially empowering women and including them into the mainstay of the financial system can go a long way. In the mainstream sub-Saharan Africa, these initiatives have generated handsome dividends, I would say, given the relatively low level of financial deepening, access, and inclusion. In Mauritius, the storyline is a bit different, given the already high levels of bankerization that we already have in the country, as judged by comfortable figures generated by financial access and penetration metrics. Focus has been more on education side. The Bank of Mauritius, we launched in 2022 a nationwide financial literacy strategy, where raising consumer awareness of financial conditions and issues that could have an impact on the Mauritian society as a whole has been really the driving factor, and remains also very high, I would say, on the agenda of the Bank of Mauritius, and personally for me also. The payments infrastructure topography in Mauritius remains at a very interesting point also, and is poised to embark on a transformative odyssey in the coming years. Several breakthroughs and milestones that will radically transform the lives of our citizens on a perennial basis are about to be achieved. These will include, amongst many others, the potential introduction of the CBDC, the digital rupee, as I've called it. Also, as you're aware, we are well progressed already on our journey of the introduction, potentially, of a digital rupee in the country. We are at a point in time when we are piloting right now one retail-based CBDC, and many other pilots are also in the process of being introduced. And all this has been a result of working closely with the industry, working closely with all the banks in Mauritius, and having numerous rounds of consultations with everyone. Ladies and gentlemen, the digital adventure is going to get even more exciting, I would say. We trade extensively, as you know, with many other countries, and our plans are not limited only to what we're doing on our shore, but also to try and develop synergies between other countries to be able to even better the offering of Mauritius and also the offering of financial services by better collaboration with other countries. One such example will include our recent initiative with India, where we have connected the switchers, as we call the national switchers of both countries together, in order to generate more aids, as I was detailing to you in the beginning. Moreover, ladies and gentlemen, to promote innovation and the application of cutting-edge technologies for the banking sector in Mauritius, the Bank of Mauritius is establishing its innovation hub. It's a project that we've been working on for a couple of years already now, and we have now reached that point in time when we are ready to launch it, in collaboration with a few of central banks, other central banks from the European segment, from the Asian segment, and also from Africa. The Innovation Hub of the Bank of Mauritius will facilitate brainstorming sessions, hackathons, and exploratory programming sessions to drive industry advancement. The launch of the Bank of Mauritius Innovation Hub is now set for the 4th of September this year. The Innovation Hub will have a regional aspect also, as it will benefit from the support of other central banks in the region. They will have an opportunity to use our Innovation Hub to be able to share and solve their problematics. Certainly more details will be provided as we approach the launch date, that is the 4th of September. At the Bank of Mauritius, we also acknowledge the benefits of open banking for enhancing the customer experience, a topic that I see in the program, open banking. Open banking, as you know, relies largely on application programming interfaces, the APIs. To this end, the guideline on cyber and technology risk management that we had issued last year includes specific requirements on the deployment of APIs by financial institutions. We have very recently also issued a guideline on regulatory sandbox authorization, which can be used by fintech players now willing to experiment innovative, fintech-driven financial solutions comprising of open banking in a controlled environment. Further, we are developing the guideline on open banking, which would set out the additional expectations on open banking transactions and activities in our country. The guideline will specify the minimum requirements for the governance and risk management framework to ensure that the associated risks are duly identified, controlled, and mitigated. We're working towards introducing this guideline by the end of this year. Hence, the discussion that will happen on the topic tomorrow would be of high relevance for all of us. And certainly, ladies and gentlemen, while we speak about digital in finance, the role of digital solutions in finance, we cannot not mention the risks that are associated also. Cybersecurity risks remain high, and we have to give due consideration to how we can develop various initiatives and embark on various projects to be able to increase our vigilance while mitigating the risk that it poses to our financial systems. Acknowledging the transformative potential of financial technology, Mauritius stands at the forefront as an innovative economy in sub-Saharan Africa. As has been highlighted by the Global Innovation Index 2023, where Mauritius was ranked first in Africa. We are now looking forward to working closely with other African countries also. Hence again, these initiatives under the ambit of the RCE, which will help us to forge better synergies and develop new relations with other partners in Africa, across the continent, to be able to learn and from the Mauritian experience, but certainly improve also the Mauritian experience. One of the most important components of when you talk about digital finance nowadays remains artificial intelligence, the role that artificial intelligence is being brought up into play. And to this end, we are giving due consideration to the role of AI also. At the level of the Bank of Mauritius, we are exploring the possibility of adopting the use of AI already in developing and delivering certainly our services. The introduction of a guideline, a dedicated guideline on the use of AI by banks and other financial institutions in Mauritius is also under consideration. Ladies and gentlemen, all of this is certainly a result of our ongoing interaction with all our partners, be it locally as well as internationally. One of the most important partners in this journey has been the OECD. And we look forward to working very, very closely and improving our ties with the OECD. And this explains as to why we have now embarked on a new era of collaboration with the OECD. And there is the formalization of a new grant agreement also that is forthwith with the OECD, and that will open even more doors for us to be able to collaborate together. It is also a testament to the success of the story of the RCE. It reaffirms our dedication to ensuring financial transparency, fostering financial innovation, adhering to good corporate governance principles, combating financial crimes, and certainly addressing multifaceted issues within the financial sector. The scope of the new grant agreement is really vast, as I say, and it encompasses, among many other initiatives, what Carmine has just mentioned, a yearly roundtable on banking and financial markets for our continent. I'm pleased at this point to also announce that the inaugural version of this roundtable will happen this very year on the 5th and 6th of September, and it will regroup stakeholders from across the continent and also from Europe to come together to be able to reflect on key sectors and factors also that will contribute to the advancement of banking and financial markets in our continent. With these words, ladies and gentlemen, I look forward to many more success stories under the ambit of the RCE by collaborating directly with the OECD, and I wish you all fruitful deliberations for the rest of the workshop. I thank you for your attention.
Thank you, Governor, for this insightful speech. Ladies and gentlemen, to mark the signature of the grant agreement in relation to our continuous collaboration between the FSC and the OECD, I would like to call on stage all members of the RCE Governing Board for a group photo.